Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
How's it going, John?
Sam, I'm doing okay. Thank you very much for asking. However, when taking a look at some of the recent economic data, I'm not sure all U.S. consumers are doing as well as I feel today.
Feeling pretty good, huh?
I'm feeling pretty good. But yesterday, the Bureau of Labor Statistics announced that the CPI increased some, 0.6 of a percentage point?
6, 7, depending on how you round it.
There you go. And today, the same BLS announced producer price index up 0.7 of a percentage point. As a result, trailing 12-month inflation in the United States by both of these key measures, the CPI and the PPI, actually increasing, moving the wrong direction.
Yeah.
And you couple this with what's going on with student loan repayments and a number of different things, you're just kind of wondering what kind of shape the U.S. consumer actually is. And oh, by the way, the Census Bureau announced, was it yesterday, that real median household income fell pretty substantially in 2022 and is currently now much lower than it was in 2019.
Yeah, and savings rates are lower, and it's always, we always talk about when we've said inflation's coming down, that doesn't mean that prices are coming down. It's a derivative of prices, so it means the how quickly prices are going up is slowing. So it's a huge difference between saying prices are coming down when you say inflation's coming down, and that unfortunate reality for a lot of people, and really I guess for everyone, is that it's a snowball effect. The longer it goes on, even if it's slowing marginally, it just creates a bigger and bigger and bigger problem.
Well, it's a big problem going on, just this high prices just remaining very sticky up there, but also, my goodness, OPEC and Russia cutting their output. In some ways, our exploration and production here in the United States is hamstrung a little bit by domestic policy, in my estimation. Yeah, we are growing, but maybe not by the rates in which we could be growing. And so when you kind of take a look at overall global supply and demand, there's now a mismatch moving in the wrong direction. Right now, demand is exceeding supply. That's why the prices at the pump are going up. Not necessarily a monetary policy problem. This is just good old-fashioned Econ 101 supply-demand curve graphs. But even so, that's real money to U.S. consumers. And really, I think if I'm not mistaken, the increase in the CPI, the sharp increase in the CPI, over half of it was driven by energy cost alone.
Almost all of it. I mean, it was a massive, massive chunk of it. And, the unfortunate part of that, and why it's so important when you talk about energy prices, it's not like, I don't know, some ancillary good that you may buy every now and then that you could cut out. But pretty much everyone, not pretty much, everyone's impacted by it, but pretty much everyone's impacted by it at the pump as well. So it just feeds into everything that we do, and so it's just a significant part of our budget.
Without a doubt. And when you take a look at things like the soaring price of diesel, the soaring price of jet fuel, it's going to impact distribution companies, truckers, obviously, which has kind of a snowballing effect, sort of at the bottom of the supply chain. Our consumers are going to be feeling that as well as feeling pain at the pump. Going, what's going on here? Well, the thing is, with diesel and jet fuel, that's actually made from the denser portion of the barrel, if you will, or even more specifically put, denser oil. There's all kinds of oils, but the denser it is, the way the refineries work, those that make jet fuel and diesel are using denser fuel, which we generally actually were a net importer of, relative to that light sweet stuff that we like, the WTI, which we're a net exporter of. So the fuel that we're creating here, we're bringing out of the ground, great for automobiles. However, it's not so great for Southwest Airlines, American Airlines, and what have you. And a lot of those places are already, telling folks, hey, third quarter is going to be a little bit different because our fuel costs are so expensive.
Yeah, and I think we're just starting to see, that it's fallen to the bottom line a little bit, and we're seeing companies, report a little bit less revenue maybe, and just starting to, again, that snowball effect of higher prices is really finally starting to, I won't say finally, I think it's been catching up.
Yeah.
But I think you're starting to see it a little more clear, and whether it's consumer savings rates being back down to normals to slightly below normal, where 18, 24 months ago is at almost all-time highs, at least relative highs.
Yeah. So all of this kind of begs the question, and I might be just putting the cart way ahead of the horse, and I certainly don't want to be like Dr. Seuss's famed Grinch Who Stole Christmas. However, with all these things kind of snowballing and converging on the same time, cuts by OPEC, cuts by Russia, the U.S.'s inability to meet its, true diesel or heavy crude needs. Taking a look at just inflation in general, and by the way, student loans having to be repaid, real median household income down, lowest level in 3 or 4 years or something like that. What does it look like moving into the holiday shopping season? The always important holiday shopping season, and even more important than that, what economic sectors or what items do you think are going to get the hook first, and how is that going to impact overall GDP growth?
Yeah, I mean the easy answer would just be saying discretionary spending.
Yeah.
Which
well, of course.
Which I guess is a sector and it isn't as well.
The elastic part of your budget.
Yeah,
I think
exactly. I mean, it's
professor
that's what the word really means. It's
Yeah.
You have a choice to buy it or not,
Yeah.
and there is a discretionary sector, but I think it is further reaching than just the actual sector.
Yeah.
So, trips, I think, is going to be a big part of it. I mean, I've talked about, the last couple of weeks, we talked about how that's remained really strong.
Yeah.
And it still is. We're seeing the airlines, pull back on some revenue and some guidance. But overall, the consumer's still spending a ton on travel. But it's hard for me to imagine. And I do think that's probably going to continue to some extent.
Yeah.
But that is such an easy part. Anecdotally, when I've looked at traveling, traveling's really, really expensive. You spend a month or more of your budget typically in a week or less. It's just a ton of money people spend, and that's an easy way to kind of save a large chunk of money, is take either cheaper trips closer by, not flying, what have you, or just not taking them at all.
Yeah, Sam, you bring up a good point about travel. It has been pretty hot for a while. How much longer it's going to remain hot is anyone's best guess. I've traveled a lot recently, some for business and some for pleasure. But over the last week, I've taken 8 different flights. 8 different flights. The one from Orlando to Birmingham last night was the first time I've actually had an empty space next to me. The rest of them have been absolutely jammed. However, when you kind of moving forward, I don't see how that continues. And I don't see how that continues, particularly if we're paying more at the pump, all that stuff. However, when I take a look at things, I might be a little bit different than you, but probably not too much. I absolutely agree. That discretionary budget, I think, is going to get whammied. Moving forward between now and the end of the year and moving into next year. And I really hate to say it, I really do think that fast casual type of restaurants, maybe even the movie industry, are going to feel an outsized impact of people cutting back on their expenditures. And please note, there's a point in the program where I mentioned that any of my comments or any of Sam's comments or questions do not necessarily reflect an offer to buy or sell investment products or services, and should be treated only as our opinions alone, not necessarily those of Oakworth Capital Bank or any of its shareholders, directors, all that good stuff. And any decisions that you make based on what we say, you do so at your own peril. Now, with that being said, I'm going to go back to that story that I've told you several times. I'm going to keep the name of the deli nameless. However, I took John out to lunch, my son John, who's another child that will probably be on the podcast at some point. Sam's frowning at that. And it's 2 club sandwiches and a couple of sodas, bag of chips. With that tip, they spin the machine around. You feel guilty if you don't put at least a little something in there, a little tax. Lunchtime at a fast casual place, all of a sudden I'm spending $36 for a couple of sandwiches. Maybe in New York City that's just what you do, but in Alabama that certainly seemed like quite a luxury. So the way I'm thinking it is like that type of thing. If I've got to cut money first out, maybe I'm a little bit different. That's the first to go.
Yeah, I think the answer is kind of obvious where people would cut back on spending, but I think the bigger question is how much are they really going to have to?
Yeah.
That whole soft landing, how much are prices going to come down? We have seen wages start to pick up a decent bit and outpace inflation in some areas of late. So it's kind of like, do we hit that sweet spot where, spending's going to have to come down some. That's going to be good for inflation metrics, but wages may start to pick back up. And we, again, that soft landing, savings came down. People pulled down on their spending to keep up with their lifestyle, and we reach this kind of make or break point and we make it. Or does inflation continue to, just cause havoc and cause a significant pullback in people's spending.
Well, I think this is where you and I might be trading perspectives a little bit. I'm perhaps not as sanguine as you are about this. I do think we're going to be in for kind of a rude awakening in some areas, particularly if these energy prices remain elevated for as long as perhaps some analysts are thinking, and as long as OPEC and the Russians think they can get away with keeping production down, as long as we can't pick it up, particularly on our heavy crude. I don't see what's going to cause trucking prices to come down or jet fuel prices to go down or anything like that. Those things shall remain higher for longer, which means that instead of reducing the overnight lending target, the Fed might be in a situation, while it's not necessarily a monetary policy issue, they might keep the overnight lending target and indirectly longer-term interest rates higher for longer. And I think we're already seeing that a little bit in the Fed funds futures market that was saying another 25 basis point increase was a coin flip for one meeting. Now they're saying another 25 basis point increase is a coin flip for the next 3 or 4 meetings.
Yeah, it's this has been the main talking point. We for what 18 months really.
It's so tiresome.
But
isn't it? I mean,
yeah,
tell me I'm wrong.
No, I mean this whole time we talked about inflation's too high, it needs to come down. But for a large chunk of the time, we've been able to say, people are still spending money. People are still having excess savings.
Yeah.
There's a lot of cushion for it to, work itself out of the system, inflation. But it really does seem we're getting closer to that kind of make or break point for it.
Yeah. So, when would you think that would be?
I mean, it can't be this year. I mean, it could be.
Could be, but
it could be. But
here we are close to the end of the third quarter.
We're close to the end of the year, or getting close to the end of the year.
It's still 85 degrees outside.
It's still 85 degrees, and the consumer's still spending tons of money.
Yeah.
And so, outside of exogenous events and shocks, I don't think you really see that significant of pullbacks in the consumer that quickly. I mean, right now, the third quarter economic data, the GDP is coming in fantastically strong. You point to reasons why it's not as good as the number may be, but nonetheless,
the headline number is going to be pretty good.
It's going to be a very good number, and so you don't see, outside of a COVID type exogenous shock, things go from good to very good to bad/very bad quick enough for it to be this year. So I think this year's off the table.
Okay, but next year is certainly on the table?
Yeah, I think next year is where it's do we make it or do we break it kind of thing. Does the consumer and wages pick up enough that savings starts to tick back up and people are able to, pull back on some areas, start to maybe build up some savings and kind of escape that worst case scenario.
Well, let me ask you this. It seems as though recently a lot of the inflation that we're seeing has really been driven by higher energy costs, right?
Yeah.
And the higher energy costs have been driven by global demand outstripping global supply really over the last couple quarters. How is monetary policy truly supposed to change that, other than crimping demand for it? And which is, if that's the case, then gee whiz. Okay,
it's not a great scenario.
That's not a real great scenario. Does U.S. monetary policy, should the Fed take that in consideration when they're determining whether or not to raise the overnight lending target, cut the overnight lending target, whether or not it's truly a monetary policy decision or what have you, or whether or not it's just the global markets behaving in a way that is making monetary policy a little bit more difficult?
Yeah, the energy is a tough one for Federal Reserve members to kind of finagle.
I think it's.
They start shorting crude futures or something.
Well, they've got a lot of inside information. I don't. I think, but that's one of the ones that I don't want the Fed members, or perhaps him. Thank goodness he's no longer at the St. Louis Fed, but he wasn't even a voting member. But guys like Bullard, they're just complete inflation hawks. And some things, believe it or not, in the global economy, really. Federal Reserve doesn't impact all of it. We'd like to think that the U.S. still does determine the future of the world's global economy. However, gee whiz, if Chinese are flying more domestically and demanding more crude oil from the Saudis, we don't have it. How's that a U.S. monetary policy decision?
Oil has always been a unique market, and it takes a lot more knowledge of global supply and demand and politics even than I would say any other sector, and that's not something that the Federal Reserve can, like you said, really handle too much. But like you talked about with Jim Bullard and people like that, inflation's going to still be around all of next year,
without a doubt.
And if the Fed is starting to say that, then it definitely is.
Yeah.
They've been late to the ball game this whole time, and so they're late to the party. And so if they're going to now say, okay, yeah, this is probably 2025 before we see it start to normalize again, it's going to be around.
Well, do you think the Fed probably needs to revisit what its longer-term target is, getting away from that 2% number and being realistic that perhaps U.S. monetary policy alone is not going to determine what inflation is going to be?
I think it'd be really detrimental if they did that right now. I think that would take a lot of confidence away from the Federal Reserve. But, that 2% number is kind of anecdotal. There's not a hard and fast reason why that's the number. But they've already done that a couple decades ago, shifting from CPI to PCE as their preferred focus. That shifted. That was essentially the equivalent of saying we'll let inflation run a little higher if we'll.
The thing about that is that PCE core deflator actually has the rental equivalency of the primary residence is a much significantly less lower percentage. I think probably a more accurate depiction of the consumer's monthly budget. So I do think that's a good move. So going back to whether or not all this is going to impact the consumer, I'm going to tell you just a little bit about my own. I already mentioned the $36 club sandwiches. Beth and I aren't spending as much money at restaurants. We just really aren't. Mm-hmm. A number of reasons for that is, frankly, we both pretty decent cooks and we can make a pretty decent meal at the house and all that stuff. But also, it's getting pretty expensive. It's if you order DoorDash off DoorDash here in my area of Birmingham, it's a pricey meal to get Thai food sent to the house. It's a real pricey meal to get Thai food sent to the house. And I'm not crying poverty. I'm just a cheap SOB. But the truth is, I haven't ordered anything off of DoorDash in well over a month. And the amount of emails and texts that they send me is really beginning to bother me. Sam, your thoughts?
Yeah, I never do DoorDash or Uber Eats. The extra money drives me nuts and always has. I'd say personally for us, I think, it's been, again, focusing on the trips. That's something that's for me where
you had the nice trip in May.
Yeah, we went to Europe.
Yeah.
We've had a few smaller trips where it didn't really have to use vacation time, and because of that, have 5 days of vacation left that I need to use. And our thought went
really, I'm counting differently.
I'll let you look at it. But no, our conversation has shifted more from a bigger trip to, okay, maybe we do 2 smaller trips and go back to Dallas for a couple days and, I don't know, New York or Boston or something that's really not too, it's still expensive, but it's not going to Lake Como for 10 days. Not that that's what we were going to do, but but it has shifted. Even then, it's shifting our consumption habits because it probably would have been at some point a bigger trip than now we're looking at doing.
Well, the same thing has happened with us. This year we didn't do our week-long trip to Hilton Head, and we didn't go overseas or anything like that. But we have taken some smaller trips. We did the trip to Key West, which you're familiar with. Annie and Beth went to Montreat and outside of Asheville for a weekend. We've gone to Virginia a couple of times. John and I just went up to Boston and watched the Orioles play the Red Sox for a couple of days, a couple of games, and then we just have one more sort of short trip left for the year, and then I don't have any hard and fast travel plans for set at all.
Yeah.
And that is my next trip. Do you know when that is?
No.
It's October. Going to Las Vegas.
Oh, yeah.
See U2, which a lot of people your age aren't familiar with who U2
I think
is.
everyone's familiar with U2.
My mother wasn't, but that's a different generation.
I'd say my generation's definitely familiar with it.
Yeah, so I think you're absolutely right. When you take a look at all the increase in inflation, even the stuff with the student loans, the decrease in real median household income, it's those lower hanging fruit. Every household's going to be a little bit different on what they cut first. It might be the movies for some people that love to go to the movies. It might be we don't go overseas to Lake Como for 10 days next year. Our trip's going to be to 30A or something along those lines. And for me and Beth, it might be might be just, hey, we continue to cook at the house and we don't go out to eat, and we're just going to save a little bit of money that way. But it's going to be unique to every household. But those discretionary dollars, people are going to be holding on to them a little bit more. And I do think it will have an overall depressing impact on U.S. GDP. Not a debilitating impact, but maybe at most drive down consumer expenditures 25 basis points of the overall equation.
And that's where, the example I used of, instead of one big trip, still travel some, still use the vacation days, but nowhere near to the same extent. And that, I think, is what you'll see across the board for people, and not necessarily just for travel. But yeah, we're still going to kind of do some of these things, but not to the same extent that we were. We're going to find those areas where it's easy to cut back a little.
So perhaps a slightly depressing impact on GDP, but it's not that death knell scenario that those people that sell umbrellas when it's raining, those doomsday forecasters, seeing all those people, hey, the U.S. economy is going to collapse. We're not seeing that at Oakworth Capital Bank. All of this is to say that we should see maybe consumer expenditures probably not soar from here, but at the same time probably not collapse. Still have a decent labor market, still have employees still have a little bit of purchasing power, employees, or buying power, or pricing power. You know what I'm saying, I think. Getting decent wages and what have you. So all told, I think we're probably seeing a situation where we have counter forces working against each other, obviously, and we're going to see consumer expenditures be okay, but not fantastic, and that will keep a lid on GDP, but it's also going to keep a floor on it as well.
Yep, I agree.
I'm okay with that. All right, guys, thank you all so much for listening. We always love to hear from you. Also, if you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, where you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more, hearing more of what we have to say or what we think, you can always go to oakworth.com, take a look underneath the Thought Leadership tab, and find all kinds of exciting information, including links to previous podcasts, links to previous newsletters or blog called Common Sense, as well as links to our monthly magazine, which we dice up and slice up and have a number of different links on each magazine. It's called Macro and Market. We'd love to invite you all to go to the website and play around. Lots of good stuff out there. All right, with that, Sam, you got any more comments on this weighty topic here today?
That's all I got.
That's all we've got today, too. Y'all take care.